Good morning, traders. Welcome into this new week. It's Pete here. This is Trading Kitchen. I haven't been away for a couple of months before sharing this video with you because I just focused on a new strategy on futures using the volumetric platform, and I will share it as soon as possible. Today, I just want to show you my intraday checklist for my CFD strategy. So it's a strategy that I use for intraday trading only in CFD. Let me first invite you to join my Discord group and subscribe this channel. Press the thumbs up button, same more stuff. I know, guys, but it's really important for me. If you, above all, use the comment section below to let me know what you think. I have an Instagram page, obviously Trading View, in which I share my trading ideas for swing trading and multi-time frame analysis for the week. Let me focus on this group, which I share my intraday swing trading, educational content like this, and also something interesting that I found on the web. It's a possibility to have a group mentorship and a trading journal with backtests, all for free. I don't need your money, just want to grow my community. Let me first show you my backtest, my journal that I keep updating in a total transparent way. So in 2023 I add these boxes, so my rules, the CFD, the CFD checklist that I'm going to show you now, and some really interesting, useful questions that I try to answer before opening any trade. And as you can see, my January is going now pretty well, but I have this strong 8 consecutive stop losses, so with this strong drawdown that I have never seen before in my trading career, so in the last 3-4 years more or less. And so that's the reason why I just took a small pause to backtest again all the strategy, because it's something very useful that I advise you to do, because there is no strategy that can be profitable forever. Market is changing every month, every year, so you need to always find an edge on the market, okay, and try to be profitable. You have to keep on backtesting all the strategy, okay. So as you can see, we have these two strategies, the CFD and the future strategy. The CFD is the same strategy that I have shared in so many videos here on the channel, and as you can see, the future strategy is going pretty much good, and the CFD is having just not very good, to be honest. But as you can see, this is a trading journal of the last year, and so if you scroll November or December, as you can see, always stop losses are higher than TP. My win profit factor is about 45, more or less 40-50%, with a risk to reward ratio at least 1:3. So for me, is when I saw a lot of higher stop losses than gains, is not an extraordinary thing. Is not is normal, okay, is part of the trading activity, okay. This is all for free. You can take a look to all my backtest, all my trades. Okay, so you can easily see my trades and try to understand as better as you can my strategy. Okay, so let's go back on trading journal. This is the checklist that we are going to see in this video. And first of all, let me just recap the checklist. So the first thing I try to do every morning is try to understand if the daily bias is aligned with the macro structure. Okay, so I first try to find the macro zones on 4-hour time frame in which I suppose price could react, okay, in the future. Then I want to find the daily bias on the 50-minute time frame and identify them, basically the supply and demands, the momentum zones, the order blocks, call them as you want. But this is for me truly important, because here in these zones probably I will open the trade. Okay, I will wait for the price to retest the zone after a break of structure, after a strong momentum impulse. So I need to see a strong power of the price in my direction, in the direction of the daily bias. This is probably the most important point of the checklist. I want to see the POC switching, okay, on the 5 minutes time frame and a delta confirmation. This is something that you can easily see only with volumetric trading platform, but there is something that you can use also with TradingView, but my advice is to use trading platform, and above all not use the CFD trading instrument, okay, to analyze the volumetric and to analyze the volumes, just because they are not real. Okay, so what you're going to see on TradingView on NASDAQ 100 and not on futures is not real. Okay, so after I see a switch of the POC, cumulative delta, and a delta confirmation as well, then I will show you all these things later. Just want to retest, to see the price retesting on the untested POC or an untested strong aggression level. Okay, and this is, you can only see this on the volumetric trading platform. Okay, on the retest I open a trade. My trigger is 1-3 risk to reward, stop loss above or below the chopper traders, or the high of the low of basically the candle that are switch, okay, in which in the candle in which I saw the POC switching. Okay, this is basically my CFD checklist, which is quite easy to understand on my point of view, but all my stop losses, well, not all, but above 90% of stop losses that I took this month is because I didn't follow my checklist. Okay, I didn't follow. So as you can see, the trade, for example, here are all short, and all the day bias is long. Okay, so for example, this is my mistake, because I probably too much self-confidence of my skills or my strategies, and I just didn't want to stay away from the market, so I opened a trade I hurry to open a trade, and these are all the results. Okay, so let's go on TradingView, and let's start from January. I just want to backtest with you. Okay, so from here, more or less. Okay, so about 9 Europe. So this is London time. So first of all, I would just want to show you this template. So this is my intraday template, in which I basically I'm looking for a daily bias. Okay, so I already shared a video in which explain how to identify the daily bias, but I just want to make a quick recap. So we have all these indicators that basically are not indicators, but are just better visual things to help to identify the possible important levels in which price will probably could react. So the first indicator is this one. Okay, ECT market session, which basically just highlight the Tokyo session, okay, and London and New York. But the Tokyo for me is the most important session, because what I want to do is, as you can see, highlight the Asian session high and the Asian session low, okay, because these are two levels very important, in which price sometimes it will change, okay, the trend after touching and break this level, re-enter the zone, okay, to go like this. Okay, so re-enter, testing, and go long or short. Okay, the second indicator is the view up. Well, I didn't use the view up here on TradingView because, as I told you, I have the multi-way trading platform. So I just added this indicator for you. My only use of the view up is with the second standard deviation band. Okay, for me is just to it just helps me to identify the premium and the discount zone. So I will probably enter long only when price touch the second standard deviation band, and short here, okay, with the upper band. Okay, so this is the only way I do use view up. Session volume profile. This is a very useful indicator that helps me to have a quick view of the volume, okay, of the value area inside every daily session. Okay, so here, for example, what I see is, look at the POC, which is the yellow line. So basically here price is a little bit going bullish. Okay, so the session volume profile tells me that we probably are bullish, even if, as you can see, we have this huge reaction that fail to break the structure here. Okay, but price now is a little bit consolidating over here. Okay, so looking only at on the standard that session volume profile, what I see that we are going to consolidate. And when I see price consolidating like here, what I can expect is a reaction of the highs on the lows of the range. Okay, so here or here. Okay, the last indicator is just a volume candle. This is something that I don't use obviously on TradingView. I use only on a trading platform, volumetric trading platform, but can be useful to you if you don't have it, to better identify the strong volumes, okay, that enter the market. So red obviously for bearish volumes, green for bullish comps, or for bullish volumes. So as you can see, price tends to react, okay, from the volume candles, okay, like here or like here. Okay, so this is basically help me to better identify the possible momentum movements. Okay, okay, so on the 50-minute time frame, what I can see is that we are consolidating, and probably we are going to go up, okay, because price is going in this direction and we don't have any break of structure on the bearish side. Okay, this is not a structure, this is a liquidity grab here, here as well, even if we see here price closing above this candle, okay, but we do have a liquidity sweep here to go down. Okay, so basically what I suppose price will do is this. Obviously I already saw, I already know what price is going to do, but this is this is what my logic is, what my what the market is telling us. Okay, let me do a quick overview on the 4-hour time frame. Okay, in which, as you can see, we are clearly bearish. Okay, why? Because we have so many structures that have been broken here, here, price keep on going down, lowest lows, no highest highs until here. Okay, from here we have one higher high, no lower lows. Okay, so the macro structure is short and we are now consolidating. What does it mean? It means that we need to identify a supply zone from which price could align and keep on going down again. Okay, so I highlight all the supply zones, which are not, they don't need to be perfect, okay, but just to keep in mind that price at the end of a huge bullish movement needs to align with the main structure to go down. Okay, I will consider a complete reversal pattern, reversal setup only if I saw a strong, only if I see a strong momentum, bullish momentum, and this structure broken. Okay, and for structure broken, I mean this kind of movement. Okay, not this, Okay, price must not re-enter the zone. I just want to see price building something over here. Okay, so when when the daily bias and the microstructure are clear enough, okay, so for this instance we only look for buys, okay, for longs. I move into this template that I use on 50-minute time frame and on 5-minute time frame. Okay, so what we are going to see right now is possible zones in which price could react, okay, both in the short side and the long side. Even if we just say that probably price will go long. Okay, so this is a supply on the short size, and as you can see we have here a lot of liquidity. Okay, and this is something that I like because market tends to grow the liquidity, grab orders above below here to go long. Okay, so here and here. Okay, so let's move, let's see what price, let's see what's happened. Oh, sorry, just one have to switch, turn the PVP off because it takes a lot of power. Okay, price grab the liquidity here. Okay, we are inside full New York session. So now what I try to see is a switch of the POC of the candle and a confirmation of cumulative delta volume. So just remember, now we are on futures. I do not use the futures plan here in TradingView because I don't need, because I have a metric platform. But to be honest, if you don't have any trading platform, this is something that you must pay for. Okay, it is about $14 per month, I suppose, if I remember exactly, but it's something that you absolutely need to use in this instrument. Okay, this indicator is cumulative delta volume, so show the variation of the delta volume on a cumulative way. So I just want to see a break, okay, of the cumulative delta volume. So the other indicators are this one, fractal breaking balance, fair value gap, liquidity void. I just use it to better identify imbalances, and this red box and green box, which are basically order blocks, or probably the zones from which impulse at the start. This is what I try to see is where strong impulse is at the start. Okay, where is the aggression, where the volumes are generated. Okay, so let's go. Sorry, no. Let's go back here. Because price grab the liquidity, I switch on 5-minute time frame. And so I have this first switch of block, okay? As you can see, the red line, okay? CFD confirm, because as you can see we have a breakout of CFD, so my enter will be at the first untested POC here, okay? Stop loss just above, just 1 point more or less above, so 4 ticks below the lower low, and this is my TP. Why here? Because we have the last structure here. What you have to pay attention is this imbalance here, so probably price will react here, okay? So if you're conservative, you can use this 3.5, which is pretty good TP. So let's see what price did. Price obviously take this the POC, touch the POC, open a trade, and we saw that probably hit the stop loss, or probably not, I don't remember exactly, to be honest. We can turn the PVP off. Okay, probably not. Okay, so we are, yeah, we get the stop loss. Okay, we get the first stop loss, and it's enough because the trading day is finished, so we finish with one stop loss. Are there any other trade that we could have taken during the day? I suppose no. Okay, they are a good short, but the daily bias tells me to go long, and so I just want to look for a long trade. So we move on the next day. Okay, 50 minutes time frame, intraday. From, yeah, it's good here. Okay, so what about intraday? Oh, sorry. Sorry, my replay mode is turned off, so I just move on today. So obviously we saw now everything, but it doesn't matter because the analysis is the same. So what about intraday? So the intraday is now clearly bearish, okay? So we can switch ECT and view up and the gold candle. This is another indicator that showed me a bias confirmation that, to be honest, I'm just testing it, but I don't care, to be honest. So what about daily bias? We are long, and now we are strongly short. Okay, what does it mean? It means that we are short, but we are inside the discount area, okay, of this range. So remember the price is consolidating. As you can see, the POC is switching low, high, then low, then high, then just a little bit higher, then low again. So price is consolidating. So as I told you before, when price is consolidating, the low of the zone are a potential good zone for longs, and the highs of the zone are a potential trade for shorts. Okay, so but for today probably we are short. Okay, from where we can go short. From here, which is the Asian session high, from here there is the low, and also yesterday highs and yesterday lows, okay, which is, I don't know, so here is the yesterday highs. Sorry, my trading view is a little bit slow just because I'm recording this video, so it's not so quick. And this is the low. Okay, I remember that yesterday high, yesterday's low are very strong level from which price usually reacts and could be very good for intraday strategies. Okay, so let's move on the 5 minutes time frame, and we use the S template. Okay, sorry, 50 minutes to identify the zones in which we could go short or long. Okay, so this is a good supply from which we can go short. And what about bullish trades? We already highlighted this liquidity, and we can move on the left if we can see something good for us to trade. But here, to be honest, I use the untested POC to better identify the zones. Like here, I'm pretty much sure that we have an untested POC here because we have strong imbalance. So we can highlight this demand and extend to the right. Okay, and this could be good as well, just because this is a strong zone from which this a big impulse had started. Here we have liquidity here, so it means that probably under here, above this, below this level, we have unmitigated orders. And as you can see, price already touched this demand, so we have to wait the other two levels, so the yesterday low and this supply zone. Okay, let me remove this periodic power volume profile. Okay, price react here. We are inside the London zone, the London session, and let's have a look on the periodic volume profile. Okay, remember that we are short. Okay, so the bias is short, but price touched a very high potential demand zone after switching, after breaking the yesterday low. So look at the CDV, cumulative delta volume, that broke the level. So we have this first confirmation over here, okay, and POC is switched, okay. So what I usually do is open a trade on the retest of POC, which is here. Stop loss just few pips, few ticks below the low, and this is a BA break-even trade, just because after 1 ER or 1.5, depends on the structure, I usually move my stop loss on break-even, okay. Potentially this could have been a trade like this, okay. When I see this reaction from this order block, I always move stop loss to entry, just because it could be, probably price will react enough to go down again, okay. Obviously, if the same situation is going to happen again, I re-enter, okay. So like here, okay, we have the POC that is switched, so I enter here again because I have also a confirmation of CVT. So the stop loss now, it's okay. So look at the stop loss here. As you can see here, we have an imbalance, okay, that are not fully mitigated yet. So my usual stop loss is here, okay, just below the imbalance here. This is a counter trend trade, okay, and probably this is going to be a stop loss, okay, and probably is one of my stop loss that I showed you before on my journal. But basically this, even if the checklist is not respected, 100% respected, just because we are against the daily bias, we are in a very strong potential supply, and from here we could expect a strong movement, okay, a very strong movement. So it's a risk that I usually want to take, because the risk reward in trades such like this are huge, okay. So for example, this is absolutely a huge risk reward ratio trade, and here as well, okay. So on the next supply zone, you want to risk less. You want to if you want to enter the trade without taking a high risk, you can move your stop loss just below this level, okay. But remember that the supply is this one, so probably price will also have enough time to go here, make another pattern and go long, okay. The last thing I tell you is that just check the hour. I mean, the 90% of manipulation takes place during the London and the New York session. So what could probably happen, the price is moving here just a little bit up, and you're going to say, okay, it's done. Then price on the opening, US opening, take our stop loss, manipulation, and then boom, okay. This is something that usually happens during the US session, the US opening, okay. So let's see what's happened. Oh, sorry, let me remove periodic volume profile. Okay, we are inside the first zone. Okay, stop loss, and as you can see, is 10 minutes before US Open. Okay, and then this is what happens almost every day. Okay, and this is not, I mean, this is something that is studied. Okay, so if you are able to ride this kind of manipulation, your profit could be huge. To be honest, my strategy, I don't like to try to ride the manipulation, okay, the opening manipulation, just because, well, my strategy is get enough profit without using that kind of trick. And to be honest, probably I'm not able yet to really ride the manipulation of US Open. Okay, so how we can avoid this? To be honest, the only solution that you have is never open a trade just half an hour before US opening, if below your trade in this chart, for example, you have a liquidity level like this. Okay, because it's pretty much sure that price during the session is going to grab the liquidity and going up. Okay, now we have another zone. Okay, so to be honest, this could be good as a trade. This one is just an example that I want to show you, because I obviously I knew this kind of movement, and I knew that price will do this kind of trick, and this is a stop loss that I took, okay, in real. So I just want just wanted to show you how you can avoid. Anyway, we have this supply zone, okay, because price broke the structure, okay, not this one yet, so not the Asian high, so probably price now will do like this, okay. But with such a move like this, is pretty much clear the trend is changing, okay. I will consider a reversal only if price will close and building something above the Asian high, okay. So let's see what happened. Okay, so we are long, okay, and with this kind of movement we probably are long for the next 3-4 days, okay. So now we have this supply, okay. So what we are going to do is waiting for the price to re-enter the zone, make the same pattern again and go long, okay, like here. So to be honest, when I see this huge momentum, bearish momentum, I just wait before opening long, even if all the setup is good, even if all the checklist is being respected, just because this kind of movements make me a little bit afraid, okay. So let's see what happens. Okay, we have the first switch of POC. Okay. We have to wait for the POC to be retested. Okay, it retest and then go high. A lot of sellers here reject the price going down. Okay, so here I'm not sure. I mean, we have a strong sellers here. Okay, obviously on using the volumetric trading platform, you can see all these things very easily, not from here. Okay, but what I suppose, just taking a look, just watching this big tail, is that price is going to market is going to reject this price. Okay, what about volumes? We have decreasing bearish volumes. Okay, and now we have increasing bullish volumes, and this is confirmed from this CFD. But as you can see, we have CFD divergence. As you can see here, we have lower lows and we have higher highs. What does it mean? It means basically that we get an absorption here. Okay, so there is nothing sure, and no we have negative confluences. Okay, so to be honest, I prefer stay away the market here. Okay, so now we have a strong rejection. Okay, price go up. The first untested POC is this one. Okay, so now I probably enter a trade. Obviously, I was just a little bit conservative right by now, but I could easily enter here. But with this strong movement, I prefer to stay just away in the market because I know it. Okay, so we have two untested POC, or better, you can't say that this is not tested. Okay, I mean, this is not a precise tool. Okay, so probably is not tested, but to be honest, you can be pretty much sure that price is going to, if is going to retest the zone, probably will react here because we have so much volumes here that are not tested yet. Okay, so let's see what happened. Okay, price leave us alone. Didn't touch this POC again, touch the supply, so now I just wait again. Okay, this is what trading is for me, a lot of missed chances, but to be honest, I not entering the market means not losing. Okay, basically this is my first goal. Okay, now price go up, and we move on the next day. Okay, nothing to do, so we have under minus 2R. Okay, even if the analysis was good. Okay, so let's see what happened during the Tokyo session until we reach the London opening. more or less here. I don't open any trade during the London opening, as I told you. Just want to see how price is developing during the day. Okay. So intraday, it's time to another trading day. So obvious trend is changed, and now we are clearly bullish. Okay, there is no doubt about it. We have yesterday high, we have here Asian high, we have Asian low, and yesterday's low here. Okay, so today only long positions, okay, long trades. Now we are inside this huge supply zone, means that probably price will react going down and grab some liquidity and find a discount zone from which we can go long. Okay, so let's remove this, and what I try to answer to myself is there any zone from which price could react? Is there any untested POC? So the only zone that I see right by now is this one. Okay, so we are just huge supply zone. Okay, the other thing that you can do that probably avoid you to take so many stop losses is like in this case, in this example, moving the stop loss just below the whole supply zone. Okay, I don't do this just because the risk to reward could, the take profit will be too far. Okay, and I don't want to stay overnight. This is one of my rules. In very few occasions I was overnight, but I try to stop. I try to exit all my trades before turning my PC off. Okay, so this is the first supply zone. Could be good also this one. Okay, because we have imbalances, we have untested POC, to be honest. This one. Okay, I just want to be conservative. I don't take this POC because the stop loss it will be very far here. Okay, so the zone will be here, and I'm going to stay discount. So at least on the 75 of the last range, which is this one, and as you can see, we are below the 75, and I like it. Okay, so let's go. I always forget to switch the PVP off. Okay, price, as you can see, does the Asian high and reverse. This could be good for a scalp, for another kind of strategy, but this strategy is must be aligned with the main trend, the daily bias. Okay, and I usually have one trade per day, not more. Okay, so as you can see, we probably also missed the chance also for today. Okay, and this is something that I knew before doing the backtest, because all the trades that I remember, this was another stop loss. Okay, to me, but I traded against the daily bias. Okay, so this strategy didn't work as good as they did in 2022 for the first month of 23, but there is something that you can manage because trading is this. Okay, so next day, what about intraday template? Okay, so now as you can see, we are short if we consider 2 days. We are long if we consider 2 days session volume profile. Okay, but if the New Year session is strongly above the Tokyo session, so if the previous day New Year session is strongly above the Tokyo session, usually what happens is the price is going to retest it and just a little bit consolidate or going down and trying to grab the liquidity, okay, before keep on going short long again. Okay, so what we have to do is looking for this liquidity here, all the liquidity levels from which price could go long, but what I expect for this day is probably price will going down again, okay, just for a little while and then go up. Okay, I'm pretty much sure the price will test this liquidity here or here. Okay, why? Because of this movement. Okay, the only thing that makes me not comfortable enough is that price didn't broke the structure. Okay, and so well, let's see, but for this day I will only looking for longs, obviously, because the daily bias is clearly long, but possible zones are not here but are here and here. Okay, so below the token session. So let's move here and let's see what's happened. As you can see, all the supply, the previous supply in the demand zones could be good also for the next days. Okay, okay, now price go down, Asian session low, grab the liquidity, and to be honest, yeah, okay, grab the liquidity, cumulative delta volume confirm here. Okay, and so this is a confirmation of this candle. This will be the untested POC. This could be the stop loss. Okay, and as you can see here is a easy TP trade with 1.4. Well, to be honest, I probably switch the stop loss just a few pips below the next liquidity level, which is close, and yeah, the take profit is always 1.3. Okay, so as you can see, price re-enter inside the trade, and inside this zone, so the token session zone, and this could be good for us for another trade, okay, but the CFD doesn't confirm. Okay, so yeah, now we have a confirmation. This could be good for us to trade here. So this is a liquidity that we can delete. The stop loss will be this one. I don't take such a trade like this. Probably I will leave the first trade because this is very aggressive, but this could be good as well, okay, because the trend is clearly bullish, so it's something that probably we can do, okay. Remember that even if this liquidity level is not, oh sorry, this is my mistake. No, okay, even if this liquidity level will be touched, so until price will grab the liquidity here, probably price will go to do that, okay. So we are here inside, and this is a trade that I'm pretty much sure I didn't open because it's late evening, and so below New York closing there is something unusual movement that I don't like, so I try to stay away. Okay, so and what we did here is using 50-minute time frame, I know, but I mean you can choose using or 50 minutes or 5 minutes. Is completely the same in terms of strategy. Obviously, if you use the 5 minutes time frame, you have much more trades, but more stop losses, okay. And if you use a 50-minute time frame, you have less stop losses but less trade as well, okay. So guys, that's pretty much it for this first video of the year. Hope you like it. Let me know what you think about it using the comment section below. Anyway, let's see if I move this trade on the break even, and let's have a look if we're going to have a TP. And yes, so on the first week of January, following this strategy, we have -2, -3, don't remember, stop losses, and good 1 to 3 risk to reward ratio. So we have about 4R, which is not, I mean, it's not so much, to be honest, for this strategy, but generally until today it is a very difficult month to me, okay, for this strategy. So that's enough, guys. Hope you like it. Let me know what you think using the comment section below, and yeah, see you in the next video. Thank you, guys.